Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Tuesday, December 22nd. As I mentioned, for yesterday's action, the stage was set. Well, in these stock indices, we did kind of walk through the door, especially the NASDAQ market. We did get a close above 1820. So I think it really kind of led the way out of all these indices. Each one has a variation of its own weakness if you look at how they're set up structurally. The NASDAQ, on the other hand, it's kind of healthy. Now, the critical pieces for the NASDAQ, now that we got it above 1820, it's going to be the next 2 days. We do not want to see it trading back below towards that 1800, below 1810. If it comes back in this range, very bearish. We are looking for a market now to back off. So how it behaves in the next couple of days is very critical. Let's take a look at the dollar. I thought yesterday we may get a bounce back up. I said we should be cautious on the short side. Well, the market did continue lower. This is what I call a false sense of security in the euro. The Swissy did back off a bit, but notice we're starting to go sideways here. I still feel the same way. Nothing telling us to abandon a short position if that is the position we had on, which is what that red line would state, but also nothing telling us to be aggressive on the buy side. And I still want to leave these areas because we could indeed get a pop, which means these currencies would get stronger and the US dollar would get weaker. The one market that did surprise me was our friend Mr. Yen. That had a very weak move, much more than I expected in that market. I thought it also may firm up here. The Aussie, they're still selling the rally there. British pounds, so it came off quite a bit, but this is a potential straight line 3 and a potential bullish pattern for us. So again, I think on the short side we need to be cautious, but look at the loonie. Look at the Canadian dollar. That's one that had a heck of a move here to the upside, found sellers where they found them before, and now we need to see follow through if these buyers are present. It's walking to a different beat of the drum, isn't it? Fascinating. Now, short end of the curve, interest rates, that's doing what it should do. We're not really looking for a gigantic move here. But the notes and the bonds, again, I thought maybe they had gotten low enough to give us a bounce, and it is just the opposite. They continued lower. So again, from these sell points here, nothing would be telling us to abandon ship. We'd want to stay on that short side of the market. And we're looking for a relatively quiet day when it comes to the interest rate markets. Now, but it is getting near significant levels. Let's move on to the metals. Gold backed off, and we see silver also backing off. Silver is an example of a market that went through a buy point, did not reach a magnitude objective. That would have created a losing trade. It also would have initiated a short position, and this one did meet magnitude objective. So, or I'm sorry, it has not. It's getting close to that, but it needs to move a little bit further. And copper didn't reach magnitude objective, is kind of hanging in here, but can we get follow through? The problem that's happening here with copper is that we have the potential for a sideways market after this equal and opposite. That's really what we're faced with in this market. It's waiting for an excuse. And the longer it sets like this, it truly starts to become a 50-50 type trade. Although I think the bias is to the upside. Energy, well, we're looking at February crude oil. This was the buy point. Here's the sell point in that market. And that difference there was $200. That's the dollar value of that move. And this would now be the next buy point. And we're looking for kind of an unchanged type day here, possibly a push back to the upside. I think this is more bullish than it is bearish. It just has a lot of work to do if it can get back up there. Natural gas feel the same way. This also traded through that sell point. And here is the original buy point. In natural gas, that would have been $1,300 per contract. It also means that we're looking for another buy point here if indeed this market moves to the upside. So the next 1 or 2 days in natural gas I think is going to be critical. Really a very interesting structural setup here because you have sellers at higher prices and these buyers that have come in with both hands at that lower price level. In the grains, well, beans continued their journey to the downside. This is more of a rally to sell. That's what it implies. Corn, on the other hand, did give us a rally up. It would have closed out that short position. This position did reach a magnitude objective. This would be a scratch. And as we talked about in the advanced, we talk about that in the advanced videos, but in the foundation course and in the introductory video, I know there's some new viewers of the videos, and you may want to check that out to give you some insights in terms of what I'm talking about here. But did not reach magnitude objective to the upside. That failed, and it would have created a short position. I think in corn, you have to be very careful on either side. This market is setting up to be a sideways market. It's got a neutral zone setting up here. And actually almost the same thing with wheat. If we pull back a little bit in wheat in today's session, then we probably are setting up that neutral zone, a market waiting for something to happen. Well, this concludes today's market studies. I hope you found a few ideas helpful, and I am looking forward to being with you again tomorrow. And in the meantime, take care.